All right, it is Saturday, 24th of January, 2026. We are going to take a dedicated look at gold, silver, and the miners, and a teeny little bonus. Probably I should highlight copper and Freeport McMoran. Copper merits attention. I know most people don't care, but they should. But anyway, let's start with gold. So we're going to highlight the monthly charts. We're not going to care about the short-term nonsense, which is always sporadic in nature. So gold, we have 5 trading days left of the month. Gold is currently up $666.62, 15.4%, 49.89. RSI is 94.94. Never been higher. Never been more overbought. Never been higher in price. Zero sign of a top. Short-term top. Again, mid long term. We know where we're going, right? We know where we're going. We're going to get retracements from time to time, but we know where we're going into the next, not just for next year, but the next decade, right? We know where we're going. People talking about gold 10K, 20K, 25. Yeah, that's where we're going. But there will be retraces, and of course, the higher we go in the short term, those retraces are going to get pretty scary at times. But for now, zero sign of a retrace. Kind of incredible to think if you look back to November 2015, 1,045. Again, naturally, $1,000 was support. That was a key commodity low, and you could argue that we're in some kind of commodity super cycle, and now that kind of creeping up. 2K, new historic high, 1,600, and now we're just accelerating away. Also, one little side thing. Yeah, this of course is the biggest monthly gain in gold in history. I mean, to think that, the monthly gain is almost what is more than half of the price it was in 2015. That's just, it's incredible, right? But hey, you know, people will look back in a couple of years and think, wow, gold 5K, that's cheap. Imagine they could buy gold at $5,000. How lucky they were to get that opportunity. So look, 10 May, let's round it off and call it 3,800, which is almost actually, it's almost $1,200 down. 1,200 before you even test this 10 MA. So you could drop $1,200 and you wouldn't even dent the first technical, which I see is quite important. So there's a lot of potential downside, but the notion of shorting, and I see people out there. I see them. I see them on X, of course, talking about, oh yeah, they're going to try and short silver or gold. You're like, what the hell are you thinking? This is a whatever you want to call it, gold super cycle. Doesn't matter. It doesn't matter what you want to call it. It doesn't even matter the excuse that you want to blame for this. You can argue it's the Fed. You could argue it's the U.S. government overspending. You could argue that it's a sign that the monetary system is collapsing. It doesn't matter. It is what it is. Because you could argue for hours, weeks about the reasoning why. Don't really care. It is what it is. Bullish gold, 5K clearly and probably will be printed Monday. And yeah, I think in terms of upside potential, remember once we get to 5K, right? 6K, 6,000 is only another 20% higher. So to me, $6,000 is an easy target. I'm actually starting to wonder at the current rate of incline. Remember, we're up 15% on a month. I'm starting to wonder, and I'm serious here, and it's something I haven't even written down for myself, but I was thinking about it last night. So I'm glad I remember this. I was thinking last night, could we see 6,000 by March? Right? It's just broad upside into March. Maybe April. It doesn't really matter, right? March, April. 6,000. And then, of course, maybe we'd come back and consolidate, maybe even retrace all the way back to 5K. Because that would make for a natural cooling wave, right? Yeah. But yeah, I think 6K in March is now uh possible, which is wild. And again, if you think silver typically moves twice as much as gold, usually, not always, but typically it will. But if gold's at 6,000, which is 20% up, then silver's 40% up, right? So, and 40% roughly on 100 gives you 140, 145, maybe 150 by March. And of course, if that's the case, then the implications for the gold miners pretty clear. I mean, you can extrapolate quite easily if you assume gold 6,000, silver 140, 150. That does look possible on a straight run, broadly straight run into March. But yeah, moving on before I get lost in daydreaming about the gold. Silver, again on a monthly chart. So we have 5 trading days left of the year. Look at that. Look at that. That's incredible. $11 at the COVID low. Bounces to 29. It's a lot of just painful, painful years of chop. But here we go. The acceleration. Look at that candle. Look at the November candle. The December candle. It was a little sellers. There's a few, there's a little cooling wave in late December. Look at this candle. Just straight up. Again, RSI 94, same as gold. So officially we printed, according to stock charts, 30101. And you think, yeah, stick another 2 candles on, right? February candle, March candle. If gold's 6,000, silver's going to be 140 to 150. It could even be higher than that. But generally, you can extrapolate. Again, actually, yeah, look at this. So silver's up $32. It's, this is simply hilarious. Silver's at $32.34, 45.8%. So again, what was I saying about gold? Silver typically moves twice as much as silver. So in this case, silver is actually outperforming gold by a factor of 3 to 1. So typically it's twice. But yeah, we're 3 to 1 right now in terms of upside. And again, note the 10 MA, which is first support on a monthly, $50, which of course is the old that's the old breakout threshold. That's the 45-year breakout above the double top of 2011 and 1980. And it was an interesting video. I forget who it was. It was Mike Maloney's pal the other day, actually yesterday. And he was suggesting he did an extrapolation of 1979. He was talking about gold. Actually, no, he was talking about silver going to 492 based on 1979 wave. 492 by the end of this year. It's crazy talk, but again, it's possible. I mean, certainly, but this is the thing. The direction is up, right? All trades long, no shorts. The only concern actually would be a main market cooling wave, but that doesn't look probable anytime soon. But maybe March, April, May, February looks pretty bullish. I think we're going to climb net higher into March. Again, that would mean gold. That would mean again. That would mean gold has a serious shot at 6K by March, by late March. And again, if gold is 6K, silver's going to be 140 to 150. I mean, if also on a 3 to 1 ratio, which is what we're doing right now, if gold's up 20%, silver will be up 60%. So silver would be maybe 160, maybe 170 or so. 170 maybe by March. I mean, this is wild, right? Again, you think, okay, say we're at 170 in March. I mean, what could you call back to? $100, maybe. I mean, the fact that we're now at 102, I'm pretty confident, and I said this last week. I don't think we're ever going to see sub $50 silver ever again after a 45-year breakout above 50. We're never going under there again, are we? Ever. Now it looks like we could print 161.70 in March with gold 6K. And of course, that's just March. Think about the year ahead. Think about the end of the year. Think about where we're going to be by the end of the year. I mean, gold 7K looks probable by the end of the year. I'm starting to think, well, yeah, what about 8? I don't mean 10, no, but 7K looks kind of probable. If gold prints 6K in March, then maybe you can look at 8 by the end of the year. It's something to consider also. And if silver's printing 160, 170 in March, then despite even if you have a retracement from 160, 170 to $100, you could still absolutely look for maybe 200 or so by the end of the year, maybe in 250. And actually, yeah, I'm just doing the math in my head. So if gold goes from 5K to 8, which would be a very bullish target, but that would be 60%. 60. If you extrapolate that to silver, that would be 180%, right? Let's just, I guess 180% we'll make the math easier and just say it's tripled 200%, right? 200% is a triple. That would give you silver $300, or maybe round it down a bit to be conservative. So 275, 300 by year end. But anyway, I mean, look, regardless, you can dwell on targets all day long, but we're clearly going up on a long term basis. We're clearly going to get sporadic little drops, and it's like, don't lose your mind on the drops. That will be the aim of the game this year. Like whenever we drop, whenever it happens, it's like keep your mind on again, the physical stackers should have no care in the world about any of this short term, even midterm price action. They just sit back. They're not in this for short term trades. They don't care. But for the traders among us, myself included, it's like, how high can we go? But keeping in mind those retraces, which are going to come. We're going to get one, and it's going to scare the hell out of people. We had a $12 retrace in silver in December. You can barely see it on here, right? I mean, there it is there. Barely noticeable. You had a little one there as well in October. Right. And look at also note more than anything, note that the size of the candles is just getting bigger and bigger. I mean, look, this is the biggest silver candle, the biggest nominal gain ever in history. I mean, if you told somebody back in 2020, oh yeah, we'll have a month where silver's up $30 or so. Let's just say that's ludicrous, because back here, right, silver might move, 25 cents, 50 cents a day, maybe a dollar occasionally, and now we're moving $3, $4, $5, $6 per day, every day. This is just the start. So yeah, before I get before I run out of time, because I know your attention span is short, but yeah. So my thoughts really are mostly on March. Can we get gold 6K with silver 160 to 170? That would be hilarious. Because it would give you clarity of the possible upside targets for year end. Because right now 8K looks pretty tough for gold. And 200 looks, kind of, it won't be easy to get $200 silver by year end. But if we can get to 160, 170 by March, it's like, hey, 200 is now going to look pretty easy by year end, even if you retrace all the way back to 100. Anyway, I'm repeating myself. We should move on. We have lots of miners to cover. Um, what I'll do is I'll leave copper and Freeport MacRan to the end. Where are my mining stocks? There they are. Okay. I mean, look at this. This is just wild. So again, keep in mind we only have 5 days in a month, so these settlements are going to be roughly where we're going to probably settle. January. Oh, look at this. I'm just gonna count the percentages. So, look, Agnico, nearest strike high, 26%, 214. I mean, here's a semi-random thought, but if gold's 8,000, what's this? 500? I'm not kidding here. If gold is 8,000, these companies are basically almost going to be printing money like a central bank. You can extrapolate. If you had a rough idea of where gold is going to be near the end of the year, if I knew for sure that gold was 8,000, yeah, I would be saying, hey, this is $500. No one's expecting that right now. No one. Oh, well, almost no one. Anyway, we've got to move on. We can't be doing this for hours. Look at this. First Majestic Silver up 52.7 in the 25s. The all-time high is around 26 and a half. So it's finally, actually, if I'm gonna adjust this chart. Look at this. Let's go back to let's pull out a 20-year. So yeah, you see on this one, look, in 2011, silver was 49, it maxed out, and First Majestic only got to 26 and a half. So we're finally, this is a laggard. This has been lagging the sector for years, but it's finally approaching the high when silver was 49. So you think this should be, in theory, it should be $50 right now. But it is catching up. Clearly, it's up 52% for the month, which is again, it's one of the it is actually it's the biggest gain ever for the stock. Moving on. Anglo Gold Ashanti, newest strike high, 24%. 106. Wow. Barrick Mining, 17% newest strike high in 51. So if in theory, I would actually say if gold is 6K, what would this be? $70? Maybe closer to 80. It should be 100 by year end. Yeah. Core mining, 46%. So again, yeah, look at it. Next target, next resistance is 34, 35. So I think, if you extrapolate another one or two candles, February and March, this is going to be 34, 35, right? That's not difficult. That's pretty easy. And if I actually pull out a really long term chart of this one, um, this is still grossly below where it was. I mean, look, this was $80. This was $80 in 2004. The 2011 high when silver was 49. It was 37. I'm not a fan. There were better miners out there. I understand. I know some people who were buying in the fours and the threes and even near two, but there's better miners than that one. DRD gold, near historic high, 37, stock 20%. So again, if you think gold 6K, this should be at least near 50, right? Endeavor silver, wow, 50% in the 14. So near historic high, finally taken out the high from 2011. Remember, this high was when silver was 49. So again, the fact that silver's now 100, 102, why wouldn't this be nearer $30? But hey, look, it's on the way. Also, this candle, bullish engulfing candle. That candle, the November candle was bullish engulfing as well. We're going up. Franco-Nevada, newest strike high up 23%. Nobody cares about that one. Goldfields, newest strike high up 21.9%, 53. So again, if gold is 6,000 by March, what are we looking at? 70, 75, maybe 80. Little heckler. Wow. Holy shit. 65%. 65. I mean, look at it. It was $6. Like 1, 2, 3, 4, 5, 6. It was $6 6 months ago. And then 4 a few months before that. Again, this is heckler is 31 with silver 102. If you believe silver's going to be 200 by year end, which now looks kind of probable actually, then what's heckler? I mean, automatically I would say 60 to 70, but you think, well, maybe it's $100. If silver's 200 or north of 200, heckler's $100, which is a long way off up. Again, there's going to be retraces. There's going to be retraces along the way. Harmony Gold, near historic high, I think, up 17%. Yeah, it is. Again, if gold is 6K in March, what's this? 35 to 40-ish. Kinross Gold, 31 point, I'll call it 32% and 37s. Again, look at the acceleration. Incredible. So if gold is 6,000, this is at least $50, right? Maybe 60. So you, again, think about the February and March candles that we're going to add on. Newmont, best miner in the world, in my view. Newmont up 24.5%, new historic high 124s. Gold 6,000 should equate to what? At least 150, maybe 160. Yeah, 160 maybe. That doesn't look difficult. If you if you believe gold 7K by year end, then this is clearly be somewhere north of 200. Or you could even start to wonder if it's going to be in the 300s if gold is 7K. I mean, look at this. We had one little washout in December where you can see it there. But broadly, it's just massive acceleration. Pan American Silver, arguably the best silver miner in the world, 24.5% in the 64s. So again, that's with silver 102 right now. You got to wonder if silver's 160, 170 in March, where's Pan American going to be? I mean, at least, I mean, yeah, if silver's 140 to 150, this is going to be around 100, isn't it? Briefly. And you got to wonder about the retraces, right? The retraces are going to be as scary. They're going to be scary. It's like how big of a trace could we get if Pan American's 100 in March? You think the retracement's going to be at least maybe 30%, right? Getting that from 100 to 70. But anyway, top tier silver miner. Royal Gold, nobody really cares, but it's up 32%, 293. It's a royalty miner. SSR mining, not a fan, but what did I say for the last couple of weeks? Look, what is that? What is that? It's a bull flag, right? Bit of a messy one, a little tail on the lower end, but it's generally a bull flag. What is this candle? What is the January candle? It's a bullish engulfing candle with a floor spike. Look at the floor spikes. We've got 4 of them. 4 floor spikes. This candle is this chart is actually very bullish. It's more bullish than some of the other ones out there, ironically. You think, where's it gonna go? I mean, 34 looks pretty easy by March. Yep. And Wheaton Precious Metals, new historic high up 24%, 146. So again, if silver's 160, 170, this is going to be north of 200. 200. I mean, look, it was 37. Just okay, it was 2 years ago. It's kind of it's kind of a scary thought to think that early 24 is now 2 years. All right, so I did want to cover copper before I forget. But yeah, copper, it did print a new historic high this month, 610. Might even take that out next week, but copper's copper looks like it's going to go into the sevens. It doesn't. It looks difficult to print the sevens. I don't know. It look sevens by even by March look a stretch. I don't know. Maybe it'll do it. Maybe it'll max out around seven and then cool back to the sixes in April, May. But yeah, copper's going up. One of the minor I do want to highlight, Freeport McMoran. Yeah, look at this. New historic high, up 19% at $60. UBS actually upgraded them on Friday to $70. My target is 60 to 100. That assumes that copper is somewhere close to around $7. And I am starting to wonder if we're going to see the eights in copper. And again, if copper's eight sustainably, Freeport is somewhere north of 100. Again, there will be retraces along the way. They will be scary. Look at this. Remember I highlighted it for gold earlier. The commodity low, copper floored around early 2016. Look at Freeport, $3.22. And then you have the COVID low, 455. When it went up by a factor of 10 times by early 22. So it's a good 2 years to go up 1,000%. But still, that's a hell of a gain, right? And now we're off and running with copper set for the sevens. Do I want to? I do have two other charts. I have a couple of year-to-date charts for the miners. Um, I'll actually go backwards and start with the third one. Wasn't going to highlight this, but why not? So this is a year-to-date performance chart for the miners. So Freeport's actually up 60.5% on the year. Of course it is. Yeah, these are the. Oh, actually, these charts aren't going to work out. But yeah, I retract that. Ignore those ones because we're only a year and I need to adjust the charts. That's not going to work. How do I want to end this? I highlight the gold silver ratio. That's definitely an important thing. So gold silver ratio is down to 48. It was 100 not that long ago. Remember, silver is now currently outperforming gold by a factor of 3 when it's normally does it by a factor of 2. I would note the importance of 32s. We saw them in 2011 when silver maxed out at 49. We saw them in 1983, 32, and 1980, 32. My chart doesn't go back further than that, unfortunately. I don't know what happened over here. But 32 is an important number, and we're not there yet. So maybe, you know what? Maybe I guess it is. It is something to look for. Maybe we'll see. Yeah, yeah. When I think about it now, maybe we should look for the 32s in March or April, right? And that would make for a short-term top in silver and gold to some extent as well. Probably the miners. But yeah, 32. Not in February, but probably in March or April. That is something to look for. And there are a number of people out there, some of the smarter people, who talk about they will allocate from gold to silver and silver to gold when dependent upon the ratio. So if we hit 32, which does look quite probable this spring, then I would imagine we're going to see videos of some of these people saying, I'm going to sell silver and I'm going to buy gold instead. And from a ratio perspective, that makes sense because, it's like gold, if there's a drawdown in the spring, early summer, whenever it happens, gold will be more resilient than silver. And say the ratio goes down to 32, And maybe it pops back up within a couple of months to like 65, although that would be difficult. Hmm. I'm just doing the math. That would mean silver gets cut in half or gold comes down by. Again, I wouldn't be too concerned on ratios, but they're interesting. It's something to keep in mind. Um, what chart shall I end with? Um, I could do a 45 year on gold maybe. Wow, that's a hell of a chart. 1980, look at it. 1980, 711, 296, 251, 1999, 253, double low, and then off we went. Again, this was yeah, post tech bubble burst. There's the property market, global financial. Think about that. Everybody gets so obsessed about the global financial crisis. There's the global financial crisis for gold. For gold, it's kind of hilarious, right? It's barely a. It's just a little cooling wave for gold. The entire thing, right? 1030 to six. What is that? 680? Yeah, 680, I think. I mean, it's a big percentage drop. It's like 35 odd percent, right? But in the scheme of things, it's like then gold bounced up to 1920, and then this is just like a long period of consolidation. I don't know if you want to call that a cup handle, whatever you want to call it. I mean, now look and see how small. Of course, this is a logarithmic chart. I generally don't like logarithmic charts, but anyway, and we know this is going to go to 10K. If I change it to a linear chart or arithmetic, there we go. That's more like it. I kind of like that chart more. It kind of puts into perspective that all of this is just a lot of chop, and that the real action started in 2011, and a little bit of cooling, and then look at this incredible run again. You know, 6K now looks realistic in March, 7K, maybe even 8K by year end. Next, I mean, you got to think also next year. I'm jumping ahead too much here, but hell, 10K, 10K gold next year. That looks pretty easy now, frankly. It really does. I think 10K gold looks is pretty straightforward. And if gold is 10,000, then what's silver? If you assume a gold silver ratio of 30-ish, then silver's at least 300 minimum. If you assume if you assume gold doubles from 5 to 10, that's 100%. If you assume silver ratio is 3 times, silver's 300-ish comfortably. Wow. Wow, wow, wow. I think we might even end on that chart. Yeah. I will wish you a good evening. Um, I wouldn't get particularly obsessed about how we're going to end the month. It's like we're going up on a multi-month, multi-year super cycle. And again, the reasons behind it, they don't really matter because that's more of an academic conversation than anything. Yeah. So with gold 49.89, silver's around 102. I wish you a good weekend, and yeah, my thoughts are now on to March, more so than February. Be good.